guys, welcome back. In today's video, we are going to be talking about trading at thousands of dollars per share, the unsettled shares, evidence of wash trading, and many more in this video. Now, firstly, let's take a look at the manipulation for AMC. Spoofers popping AMC's growth potential. So like I've talked about, you can always go look at Crystal Ball's page and you will see countless evidence of AMC constantly being spoofed. You can see the orders coming in here at 0.0001 for AMC. Again, coming from the usual people, we have Virtue, we have some others as well. We sometimes have Goldman Sachs and of course others as well. But this is what we've said in terms of understanding that AMC has never seen real price discovery. The fact that we are seeing AMC down 1.64% today, the fact that we have never seen AMC experience, the real price discovery is because we are constantly a victim of these manipulation tactics that's being used. And the question to ask here is, why are they doing this? And you can see two different screenshots while they illegally manipulate undervalued retail held stocks. And this is again the same people that's doing it. You can see the same orders that's coming through for AMC. And what we have to understand is that why are they doing this? And the reason for this is very simple. It's because if they don't suppress it, then they will have to pay thousands of dollars per share. And why do I say that? Well, let's take a look at this. Reminder, MMTLP shares were sold for thousands per share the morning before FINRA implemented the corrupt stock halt. Settlement must reflect the fact. And so we can take a look at this, and it's just order for the MMTLP shares, and it's coming in at thousands of dollars per share. Now, the reason for why I say this is because firstly of what we have covered recently. We've talked about MMTLP. We talked about what firms were called out for MMTLP. Obviously, Citadel was one of them. Another one was, of course, Anthem Fund, which we talked about yesterday, and we'll talk about this as well later on. But this is what's happening. Now, some other things you should be familiar with is the stock halt and, of course, the settlement. Now, settlement has always been a big issue. But before we talk about that, let's talk about why they are spoofing, and why we talked about and why we started the video off with spoofing. It's because they don't want to see AMC being traded at $1,000 per share, because they understand that it's a potential. The very fact that MMTLP at one point had that potential shows that where AMC is at, shows where GME is at. Now, we've talked about, while there is no way to obviously measure the scale of things of MMTLP against AMC against GME, we know that there are hundreds of millions, billions of shares of AMC and GME that exist out there. So if we were to see the same thing happen for AMC and for GME, we're also going to be looking at them being traded for thousands of dollars. But the next thing to focus on is the stock halt. Now, for AMC, and especially if you've been here since 2022, 2023, you'll know that AMC experienced plenty of halts, and we've experienced more than, 5+ halts in a singular day for AMC, for GME, and the number goes even higher than that. And the reason why they do that was because they didn't allow AMC's price to go up. All these halts happened for when AMC's price obviously went up. When AMC price went up even 20%, they had to halt AMC. And this is what we've said, because by halting a stock, it stops the bullish momentum, because they are trying to actually suppress the price. And so just like we've seen with MMTLP, we are also seeing the same for AMC and for GME. So you can truly understand just how much they robbed from the retail investors by halting AMC, by halting GME. And this is what we're seeing. Now, of course, the settlement, like we've said, is a big problem, and it talks about and reflects why we've never seen AMC, show the real price discovery. You can see blatant, unmitigated fraud by hedge funds. How many hedge funds have naked short positions like this in AMC, selling millions of shares without first locating or borrowing them? And so this is because we're talking about the Anthem Fund, who, like we've seen here, caught naked short selling over 10 million shares, where they sought to purchase the shares back for nearly $3 million. Now, like we've talked about, the very fact where we are seeing them do this for MMTLP, you can only imagine just how big of a situation, just how many shares exist out there for AMC and GME. And so if we are able to see thousands of dollars, if we're able to see, whatever the value is for here, and again, like I said, whilst there is no way you can measure the scale of things, I do think AMC is bigger. And so if it's already this big for MMTLP, just imagine how big it would have been for MMTLP. Just imagine how much the price should have been for AMC when we did have that momentum, when we didn't have to be faced with so many holds, which stopped the value of AMC, which allowed these short sellers, these institutions, to obviously get a hold of things, to manipulate AMC during the hold, to settle the price, to unsettle some of the shares, and of course all these tactics that they've used. And this is what we need to talk about. And you can also see some other proofs. Stocks stuck on red show with potential evidence of wash trading should be enough to make regulators and reporters curious. And this is just referring to so many different things. The fact we are seeing all of these stocks on red show. Now, again, we are seeing this for countless amount of shares, and those shares that are on the red show, that are on the threshold list, are already experiencing, of course, these unfair tactics, these tactics that are used to exploit retail investors. Like I said, it doesn't just exist for AMC and GME. There isn't just only manipulation for AMC and GME. But what there is that the biggest manipulations, the biggest suppression of a price, the biggest naked shorts that exist out there are AMC and GME. And it's something that we've faced for a very long time, for many years now. And again, like I said, hundreds of billions of shares that exist out there for AMC and GME. And that's the situation of where we are at. And this is something that needs to, of course, be regulated. It needs something that these reporters need to talk about, because when you take a look at the actual coverage of these FTD problems, of these naked short problems, you'll see that in the US, there's not many. When you look at FTDs, not many articles are talking about it. You can only find it here and there on Twitter with certain individuals, not the actual media institutions that exist out there. The only people that are taking, when we talk about regulations that are taking naked shorting serious, are people in, we talked about the South Korea government, we talked about other places, the regulations in Europe, but in the US, it is not. And that's what allows these naked short sellers to obviously roam free and allow them to exploit these, manipulation tactics, because there isn't enough regulations. And you can also see why the lack of regulations is causing a massive problem. Just in, UBS is planning to shut down a unit meant to help hedge fund traders just days before they're set to absorb Credit Suisse liabilities, effective March 21st. Other stars really aligning here. Now, we've already talked about plenty of problems that has happened with hedge funds recently. We talked about how Citadel were forced to close their highly leveraged positions. We saw how they experienced a 1.2% loss in February, and that they will continue to do so in March. And these are obviously all pointing towards the fact that they are over leveraged, that their risk management is not well, and that their positions are becoming upside down. Now, what's more is that the positions that were accumulated years ago, because these positions that UBS are inheriting from Credit Suisse are positions that they've created years ago. The toxic swaps of AMC and GME that they've created back, whether it's in 2021, 2022, 2023, is not recent. But the very positions that has been created years ago, that has been kicked the can down the road, that has been elongated, that has been delayed, are all starting to really come into effect right now. It's all having an impact on these firms. And so just as we're seeing so many things, and when you take a look, and anyone can do this, just look up UBS recently, and you can see all of the news that are showing UBS are actually all negative, that are showing that they're running out of liquidity, that are showing that the risk management is becoming too big, showing that they don't have the capital to withhold certain positions, showing that they are losing a lot of things. And so these are all showing what short sellers are at. And another worrying thing is, you can see last time all-time high were broken here, then 2022 market crashed followed. Prior to that, exact same story in 2008, only exception was 2000, but back in those days, the level of leverage in the system, both consumers and institutional, was a tiny fraction compared to today, just a observation. Now, this is obviously talking at the previous data we've seen of market crash. Now, what we have to understand and what's worrying about this is knowing that past data have shown that when we are seeing things like this, we are due for a market crash. Now, while there is the exception of 2000, but what we have to understand that the money involved is completely different. When we take a look at the derivative positions that these institutions are taking, that the leverage they're taking, we talked about Goldman Sachs, the second biggest derivative positions, opened with 100x leverage that are in the trillions of dollars, and the top 5 all have positions are in the trillions of dollars. And so that already highlights just how risky and volatile, and again, just how much is that stake here. But yeah, guys, thanks for watching this video. I'll catch you guys next time.